Hey, Mortgage Coach community, Dave Savage here, and today I have as my guest Julian Hebron. Julian, what's up, buddy?
Hey, how are you, Dave?
It's good to have you, man. So for those who don't know Julian, I've known Julian for over a decade. You know, he's always been someone that I've sold to, you know, whether you were back in the day as a loan officer and I'm like, hey, you need to use Mortgage Coach, whether you were, chief marketing officer at RPM, or most recently, marketing executive with Loan Depot. You've always been someone that I've super respected, and someone that I've always been like, hey, we need to do bigger things together with Mortgage Coach. So it's fun to interview you right now as a consultant and, the owner of the Basis Point. So it's kind of a new conversation, right?
Yeah, well, thank you for that. I appreciate that. And yeah, so, I've had, the last 15 years I've been in the mortgage industry. I've done just about everything, starting out as a producer, eventually became a top producer. It took me about 4 years to do that. Then a producing manager. During the crisis, I started in October 2008, a joint venture with a large real estate company here in San Francisco, and ran that for 6 years. Went and took over the builder division at Wells Fargo. Returned back to RPM Mortgage to create a master brand after the company had bought a few other brands, called Lend US, as their chief marketing officer, and then had the very great fortune to be recruited by Anthony Shea at Loan Depot, and to join their marketing executive team. And then I have, in the meantime, the last 10 years, run a company, a consulting and media company called The Basis Point, which I think a lot of your audience knows of, as a very influential blog that tells the truth, and that's what we're going to do today. But I've also been consulting for a lot of mortgage and fintech companies on the side for 10 years, and effective this summer, I've started to pursue that full time, so I'm very, very excited, and it gives me an interesting voice because now I can kind of really start to come out with some of these theories that everybody's thinking, but not everyone can say.
No doubt. And the way I see you now in your new role, coming into the Basis Point, the content that you create is like this, chief marketing officer for the industry. And so I would love, I want to really zero this conversation around one. It's a debrief for Mastermind. Yep. We were both at Mastermind.
Yep.
You led a panel. I was the MC of the Manager Summit. So I actually got a few takeaways that I want to make sure come out in today's conversation. Yeah. And then I know you got takeaways, like between all the executives we talked to, the folks we had on stage. By the way, anybody watching this right now, we live streamed the CEO event, and it's in the Mortgage Coach Productivity Mastermind group. So if you're watching this and you want to actually see the first panel and the conversation among several CEOs, go into the Mortgage Coach Mastermind group, and you can see the panel discussion. But Julian, why don't you share what were some of your big takeaways from Mastermind this year?
Well, it was a more somber crew this year, and for those that don't participate every year, quick recap: there's two tracks. There's the main stage, which is predominantly focused on LOs and production, and then there's the executive track, which is predominantly focused on executives, even though anyone can participate, but the issues that executives are trying to tackle in the industry. So I think the narrative has remained very, very similar with respect to LOs. That event especially is definitely targeted at top producing LOs. And today I hope we can cover a little bit about what about the rest, right? Because the top producer narrative doesn't necessarily apply to everybody all the time. So in the executive track, we actually spend a lot of time talking about that and what does disruption mean. And I actually have a theory about disruption can actually provide a lot of opportunity for those loan officers that aren't trying to make $1 million a year, but that really want to make a good living. So as we unfold this conversation today, I hope to get into that a little bit.
Yeah, well, there's no doubt. I mean, that word disruption at this event, I mean, I think I completely lost count of two words, price compression, the price compression wars, which are real. And it's not a passing storm. There's a new normal in place. The word disruption, right. So, I mean, I'd love to hear, why don't you do that? And by the way, I want you to answer the question this way.
Sure.
About 70% of the people that watch this are going to be local referral-based mortgage professionals, ranging from struggling to the absolute most elite mortgage professionals in the industry. About 30% is either regional leaders or C-suite. I mean, we have a lot of heads of production and CEOs that listen to this content. So why don't you kind of unpack what does that word mean to you? And by the way, how do we misuse it and misperceive it?
Yeah. If I had to put it in a sentence for the context of the audience that you just said, I would call it market share. And loan officers can think of market share in terms of what's going on in their own local markets. Of course, companies think about it in terms of where they stand in the industry, right? So here's a couple of interesting stats, right? If you look at the inside mortgage finance, market share stats, which are the gold standard of all of the market share, 0.3% market share is a $6 billion mortgage bank, right? Those are huge numbers for the folks that are running those companies, but it's tiny in terms of market share. So when the disruptors, so to speak, and I'll cover that in a moment, who's coming for the mortgage industry, right? When they think about disruption, they think about market share. Hey, here's a $2 trillion industry that is completely fractured from a market share standpoint, and how do we kind of have a winner take most model? That's what I think disruption is, and that's what the disruptors are thinking about, whereas the predominantly retail mortgage industry, all of that market share is mostly small retail firms fractured, and they don't think about that, but it's coming. And it's brewing, and people don't really know yet. And I can dive into some stats in a moment, but does that answer your question?
Yeah, I think it definitely gives some perspective. I want to add on, like, if I think you're a local referral-based loan officer,
yeah,
the number one thing you need to think about is market share of your past customer database. Because when I look at how many, let's just say a successful loan officer that's been at it for a long time, he or she has helped 1,000 families. What is your market share within the families that you served? I just think it's an opportunity where literally most loan officers can double and triple, like, with not a lot of effort, the amount of past customers they serve. So I just want to bring it down to that level for the loan officer.
Yeah.
That's your market share, the families you've served. Now, by the way, there is a bigger market share. Look at how many realtors that trust you and like you. How many transactions are you doing? I do want loan officers to start thinking about, what is my market share? How do I grow it? And then, am I really optimizing it? But with that said, why don't you share some stats and facts and really drill down on this?
Well, let me touch on the loan officer part, and then we can come back to the company part. But the loan officer part, okay, so everything I just said is about lenders and lenders coming to disrupt the existing lending infrastructure. But on the software side, those disruptors, very much unlike what the narrative says on the surface level, are all there to do exactly what you just said, which is the fun part, right? These newer companies and your company that continues to evolve with this marketplace exists to help loan officers do this. And some of the fancy marketing terms that you don't often hear at the loan officer level is like, driving a funnel, right? The top of the funnel is acquiring the customer, and it's nurturing that customer as you move down, and it's closing that customer, and then it's amazing that customer long after they've closed, and providing ongoing benefit for them for between when the closing time and whenever you do the next transaction. So there's amazing tools out there to do that, to kind of manage each of those stages of the funnel. Adoption, going back to what we talked about last week, adoption of these tools is the biggest challenge, right? The traditional top producers mostly use teams and traditional methods to kind of get after their people. But I think if you talk about the mid-level producers, and especially those folks that are getting started in the industry, adopting these tools and becoming an expert at them is how they're going to get that market share, as you say, for their own local markets and their local activities, right?
So by the way, did you hear that? So if you are a new loan officer, and by the way, if you're a struggling loan officer, and I believe this with all of my heart, because between your CRM and, let's say, a mortgage coach, and let's say your POS app, those three tools will allow you to create just an infinitely better experience than every other than 90% of the loan officers in the country. So if you're new, I can't emphasize enough, master your CRM, master your POS, master mortgage coach, be able to go from, the industry is still price, hey, let me give you a rate quote. I can get you this rate, this is your closing cost, here's your monthly payment. But, being a mortgage coach where you're delivering options is a massive competitive advantage. So I think that's a huge point, and I love that you made that point.
Yeah, let's dive deeper on it for a second, because so here's what's interesting. I've been running the Basis Point for 10 years, yes, but now that I'm pursuing it full time, it's very startup-y, and I'm overwhelmed, and I'm trying to figure out what to focus on. It reminds me so much of when I first became a loan officer, and I'm like, oh my God, I don't know where to focus, right? So I'm going to do a quick Dave Mortgage Coach commercial, and this is not paid for everyone out there in the audience. But back in 2003, I made a transition, and I came into the industry from the money management business. And so I focused on financial advisors because it was a space that I knew more so than realtors. That came later. And I was trying to find a tool, and I'm like, oh my God, I'm overwhelmed. How do I used to pull my car off the highway on the way to work. I had a 30-minute commute. I would be so exhausted. There was a couple of times I pulled off the highway and take a nap because your brain is just overwhelmed of like, where do I focus and how am I going to get business? So I found Mortgage Coach, and I know you don't like me saying this, Dave, because you're biased on the sophistication level back in 2003, but it was just beyond a spreadsheet. But for me, that was fine. Because I was like, this is what I need. This is how I sell. And when I found that, that's when my book started to take off, because I could make a presentation to a financial advisor that made sense, right? And as I've matured and run entire corporate marketing groups and sold different suites to the entire sales force, there's a number of other tools that do that because the game has changed. But that's just one example. Choose a tool. One, maybe two, and focus on that. I know you hear this all the time, but I'm going to hammer that just because for those folks, it's still the same thing. Just focus on one or two tools that help you manage that funnel activity and drive those customers, whether it's a realtor, financial advisor, builder, or just actual customer down the funnel. Social has complicated that a lot, but I'll pause there for a minute.
Well, it's complicated, but it's also really just unleashed, the opportunity to have this multi-channel relationship,
right?
Email, text, Facebook, you can really connect. By the way, what when you were at your peak as a producer, what kind of production were you doing?
Around 85-ish, with two assistants. So that was kind of like the year-over-year mark when I was at my peak. But that was also at this, I kind of hit my production peak at the same time I was also hitting a producing manager peak. So the team grew so much. I was also, in addition to running that, running an entire group,
Well, hey, 85 million a year in production is awesome. So
thank you.
Congrats on that. Okay. So this is our first interview together. By the way, Mortgage Coach community, I don't know if I'll be able to hold Julian accountable. First of all, if you're getting takeaways of value and you think this is good for you, good for your mortgage friends, good for your exec team, give us a like it so that we know that this is connecting, and share it with your mortgage friends. But I really want to connect with people and get them to realize that, everybody's just sitting on being the disruptor. There may be a time 5 or 10 years from now where they're, whether it's Amazon mortgage through Prime is throwing down, kind of like an Uber-esque disruptive strategy. By the way, maybe that will happen. Maybe it won't. Maybe it will take 10 years. But every single loan officer is sitting on a disruptor right now. Their CRM, their mortgage coach, their POS app. So what are some other stats and facts and just ways to kind of drive this home?
So, okay, I want to pick up this thread, and here's why. Because when this disruption comes, and it will, and I would like to close on that because I think it's very interesting, but let's just say that the lending institution that you work for could actually give you some customers, you're still going to be the one driving it down the funnel. Again, so maybe they get it, they acquire it, but you're going to nurture it, you're going to close it, and you're going to be the one that has to amaze them on an ongoing basis. And to Dave's point, the tools that are available to you guys in most of your companies today, some of what we talked about these new companies that great lenders are hiring and putting on and making available to their whole LO sales forces. For those that aren't adopting it, I get it. You're the top producers. You have teams that can kind of run this stuff for you. But for everybody else, focus on that, because when the disruption comes and you know how to use all those suites, like Dave said, CRM, POS, etc., that's the stuff that's going to make you shine and be able to manage that funnel that much more efficiently.
Yeah. Well, and by the way, the teams, I would just tell you, Mr. Mortgage Coach, we're acquiring customers faster than ever. Our adoption is up more than ever. And you're seeing the leader of teams saying, hey, team, this is a new requirement. I'm managing this requirement. Everybody gets a total cost analysis. The number of total cost analysis are up, like 2x this year. So whether you're a team or you're a new loan officer, I just hope one point is you're getting out of this conversation is you're sitting on a lot of disruption that you're not getting after, because one, you're not clear on your market share. You're not measuring what matters. Like, how many past customers do I have? How many loans did I close? What's your past customer pull-through rate? How many deals are going on within my realtor referral network? How many did I get? By the way, that's how the big boys, when Amazon comes into the space, they're going to be very scientific about it. They're going to execute well with CRM. They're going to execute well with funnel. They've got, with intellectual or artificial intelligence, they're going to know who's buying, who's ready to refi. They've got multi-channel communication. They're going to get after those customers at the right time with the right message.
That's right.
With a digital mortgage experience that's going to kick your butt. If you are not delivering this, I'm a local professional, I'm delivering a great experience, it's gonna hit. So I want to keep this to less than 20 minutes. So I'll let you make one more point. And I also know that you're gonna make a prediction on the disruptors are coming and when and how.
We'll do, if I can squeeze it in, but I want to stay on the LOs for a second, because one piece of advice I would offer with all of the tools that do exist, and going back to my own experience with Mortgage Coach, if I could offer one thing to LOs, it's this: lead with rate and fee. Everyone sort of says not to do that. Lead with it. You know why? Because customers are loyal as long as you have the best price. Typically, you can work with that 8 spread. Everyone knows that. But what I used to do is I do the 60 to 90 minute consults, and then somebody would bail on me when I got to price, because I used to do it at the end. When I started doing it at the beginning, I could talk to so many more customers. That's the name of the game. You talk to a lot of them, because the ones that say, great, you're in the market, now let's jump into the consultation and you use all your tools that you have. That's my suggestion.
By the way, I can't help but pile on to that topic. So I recently released what's called the Lead Conversion Playbook in my LinkedIn profile. So you can go read that article. I'll put a link below. If you're watching this in YouTube, it'll be in the description below. But one of the trends I'm seeing by top producers, is that everybody's shopping. It's never been easier to shop. So just delivering a fee worksheet with one loan is like saying, hey, shop me. And by the way, they're going to get options. But the best loan officers, when they deliver the total cost analysis, they're delivering options. They're saying, hey, here's a point, here's no points, here's monthly MI, annual MI. And by the way, if you want another option, if you want to shop, just tell me, text me, and I'll add that to your total cost analysis. So if you lead with options and you show cost over time, now they're shopping within your platform. Because they're going to shop. And so I like your point. I just want to make sure it's not just start with the rate, start with options, because they've got Zillow. They've got Zillow. They're going to get options there. They've got online search. They're going to get options there. So you want them to shop within your platform. Anyways, back to you.
Yeah, no, the main takeaway is talk to more people faster and still give the advice. That was my biggest lesson. That's when I finally broke through and I couldn't get past a certain mark. I found that getting past 50 was really hard, 50 million. And it was because I was spending too much time doing these deep consultations for folks in mostly a high price market that are all price driven. So that's all. But yeah, I think we can save some of the other company level and industry level disruption stuff for another session, because that's a little bit of a rabbit hole. But I like this thread for the loan officer specifically for today. And for whatever it's worth, I'm happy to help anyone who's watching this as well. You can reach out to me through the Basis Point.
So by the way, the Basis Point also on Twitter, during Mastermind, I'm not a big Twitter guy, but you know what? I was at the event and I was following your Twitter. I was like, this is good stuff. The way you were, it was like you made the event better because I was hearing it. And then, there was even things that were said where I'm like, oh, I missed that. Of course, I'm ADD, so I probably was, maybe on my mobile phone too much. Well, by the way, I'm not going to let you get off this call because you did kind of tease us with disruptions coming.
Yeah.
So at least tell us how confident and when and how within a couple minutes. And we could go deeper on it in another conversation. Of course.
Let me just give everybody a couple of quick stats that are a little crazy. And I apologize if I'm not looking directly at the camera because I want to get some of this right. But here's an example. Globally, there's 26 fintech unicorns, which means fintech companies valued at $1 billion or greater, in aggregate totaled at 77.6 billion. Okay, but more importantly, global VC-backed equity funding, in other words, just equity, not debt raises from companies just in the first quarter, fintech companies in the first quarter of 18 was 5.2 billion across 323 deals. Majority of that was in North America. So I just think about that for a second. Think about that relative to the, either volume or net income of your own companies. If you don't think that that these companies are thinking big, and again, to what I said earlier, when these companies put billions into these lending startups, these VC companies, they're thinking about market share, industry level market share, not just, hey, let's be another $3 to $10 billion mortgage bank. They want to come for it all. The cool part about it, though, is that they're going to be focusing on going after the customer, right? The customers we're all trying to go after directly before us, before realtors, before builders can get to them, and then share that customer with loan officers, with builders, with realtors, et cetera. So let that one sink in, and I think if Dave's willing, we could do a deeper dive on what that means. But these companies are putting billions behind their efforts, and they're going directly after the customer with the idea that they can give those customers back to the sales forces. So maybe that's a good place to stop.
Yeah, well, let's do that. I do want to also reference, because you just triggered a thought. I interviewed Steve Brown earlier this year. I'm going to put a link down below to my interview with Steve Brown. Steve was the former futurist for over a decade for Intel. So super smart, totally understands what's happening in the market. He actually gave me the term, Dave, the way I look at your industry is referral-based local loan officers and lenders. And he goes, well, I track, 24 technologies that are changing the world. The 4 that are really hitting the mortgage industry are big data, artificial intelligence, multi-channel communication, and voice. And by the way, when he talked about voice, he was referring to like Alexa and Apple Home, but he was also making the point that within a couple years, guys, your family will call up for a mortgage and they'll be getting a rate quote from someone, and they will be having a conversation, and it'll be like a minute into it, and they won't know whether they're talking to man or machine. Between the quality of voice and artificial intelligence, that's where voice is going. So I want everybody to zero in. And my goal here at Mortgage Coach is I want anybody that follows me on YouTube, anybody that subscribes to our premium platform, any CEO that integrates it, I want you to have a competitive advantage. So I hope you come to the next interview with Julian and I. If you have questions for Julian, put them down below. So if you have a question, put it in a comment, whether it's Facebook or YouTube. We'll hit it. And then Julian, let's get something on the calendar maybe 2 weeks from now. And let's have another conversation around this.
Part 2.
Okay, brother?
Yeah, that sounds great.
Part 2.
All right.
Hey, thank you, man. I really appreciate it.
Yeah, likewise. Take care. Bye.